Happy Tuesday, everybody. Yesterday was Yom Kippur, historically the first or second slowest trading day of the year, neck and neck with the Friday after Thanksgiving. Held true yesterday, lighter than normal trading volume. We'll get to that in a moment. Today is September 26, 2023, and this is your on location from Israel Tuesday market update. Yes, I'm in Israel for the Jewish holidays and to see my two boys that are in school here, but still on the job, so let's review last week's market action and preview what's on tap for this week. Markets opened slightly lower on Monday as they did a push me, pull me with the news. On the positive side, the global news with China and the U.S. relations may be improving, and Apple iPhone sales estimates looking strong. The other side of the rope was oil prices rising, think inflationary, and the European central bankers' hawkish talk. Overall, they pretty much offset each other, and the markets were a little changed to start the day. Not much coming from the eco data, and Yellen had some more positive comments. Not sure we've heard anything negative from her in this news cycle. Some things are the same. Actors, writers, and UAW still on strike. Latest IPO, ARM, down again. And as I mentioned, Apple's trying to bounce from a beating it took post-new product event. Sounds like a broken record. Up into the event, down after. Patterns are made to be broken. We'll see. Markets positioned for the press conference from the Fed Chair Powell. Yes, a release is coming too. Meeting starts Tuesday, release and presser on Wednesday, but focus on what Powell says at the presser. Instacart IPO also due out. Small part of the company priced Monday afternoon. Recall, this is similar to the Vietnamese EV company. Let's go public, but only so certain holders can get some liquidity, but not much out there to trade. Watch out. First volatility due to small number of shares, and more importantly, when the lockup expires and the insiders can sell, watch out. Talk has started about the looming government shutdown, and if it would make a difference to you and me, hint in life somewhat, in the markets probably little. Dow, S&P, and NASDAQ all in the green, all by less than 0.1%. There was optimism pre-market Tuesday for a while as Eurozone eco data showed slowing of their inflation pressure. We also got global growth estimates going up, yes, up, and that was helpful to calm the stagflation group a bit. Looking good. Then Canadian CPI came in, and it came in hot. And I'm continually surprised how Canada is watched so closely, but there you go. Futures turned and stocks gapped lower. There was not huge moves as the market waited for the Fed on Wednesday, but that does not mean there was no news. Disney announced a $60 billion pending investment in their parks and cruises. Let's talk about national debt, and this will be something we'll have to work on more, either on these videos or maybe on a special. This past week, we passed $33 trillion mark. That's up from $31.5 trillion just since June when the debt ceiling impasse was resolved and Congress gave the U.S. Treasury unlimited ability to issue debt until at least January 2025. The U.S. Treasury estimates that this number will be $46 trillion by 2033. Only problem, and no, this is not being addressed. Who will be the buyers of all this debt? The largest two holders, Japan and China, have been lowering their holdings since 2020. Canada and the UK have been adding, so we'll just have to see. The data shows that U.S. retail, in the form of mutual funds and ETFs here in the U.S., have been increasing their shares. This is a story we'll have to watch. Just keep this in mind. More supply, which it seems pretty obvious there will be, requires more demand. And if not, prices fall and rates rise, probably not good for long-term equity prices. The Dow, S&P, and NASDAQ all in the red, this time all about 0.25% each. Wednesday or Fed Day had markets open higher, again from a non-U.S. inflation number. This time the UK and their CPI number was a slowing growth, below expectations, and that offset the hot Canadian number from Tuesday. That was all we got to get started, and then the waiting game began. The Fed kept things in a range until the release. The release was actually news, as the dot plot actually showed another expected rate hike in 2023, and only 50 to 100 basis points in cuts in 2024. That the market only 50, not 100 basis points in cuts in 2024 that the market was expecting. Again, I refer you back to the comment I made a few months ago. The Fed is not good at forecasting its moves. As Morgan Stanley said last week, we think the Fed is finished. They just don't know it yet. That was enough to bring selling, and more was to come when Powell took questions of the presser. Overall, there was not much news from the Fed, just more to try to convince the markets that they actually do mean what they're saying. Higher for longer. Once they do stop or finish, this will be a concern for the markets because they'll lose their catalyst. The higher for longer is going to be longer. So what will move the markets then? Markets will be looking at higher rates for longer and possibly slowing growth. This is not what the market needs for valuation. Remember that word? I keep bringing it up. Possible government shutdown, labor strikes all over. This may not really make the growth difference, but certainly does not help sentiment or inflation. The question is, how can inflation numbers keep getting better if we see labor push wages higher? Already on the books is UPS increase of up to 55% for some, then the pilots at United at 40%, American at 21%, Delta at 34%, and that's before the UAW and the actors. Oil prices at recent highs. By the end of the day, the Dow was down 0.25%, S&P down almost 1%, the Nasdaq was down 1.5%. We're also watching FedEx. If you recall, I told you FedEx earnings, and their numbers were good, and the stocks reacted. Remember, that's good news for in general for the economy, at least viewed by some. As I've mentioned, also the IPO market is thawing again. Marketing automation company Klaviyo came to the market on Wednesday and was up 9% on the day. Not sure how long it will last. I already told you about ARM falling, then moving back up, and Instacart was off by 11% on day 2 of trading. Recall that I mentioned this before. The IPO market thawing is good. It will clear the way for more cash to be freed up by some of the private investors that have been locked in. We will see how this works out. As we spoke about labor, there's hope with the writers and producers, not yet with the actors, but we'll see. Stocks looked lower at the start on Thursday as bond yields were higher and caution was the emotion of the day. Higher for longer on one side and FedEx strong quarter on the other. Jobless claims back to near 200,000, lowest since late January. Labor market is still tight. After Wednesday, the fragile market did not need much. Stocks came under pressure off the start. Bank of England came in with a pause, but reiterated that it was just a pause. Quote, the job is not done yet, close quote, they say. Markets had more selling to come along, or maybe just a lack of buyers, and markets are looking for support. The Dow was down a bit over 1%, S&P down 1 2/3%, and the Nasdaq down almost 2%. Microsoft had a new set of Surface computers, just rolled out last week, along with AI tools for Word and Excel. This is a good time to tell you, if you wondered, yes, maybe the latest shows that the latest information that ChatGPT is being used by students. As school started again, volume at ChatGPT picked up again. For good or for evil, not sure. Stocks bounced out of the gate on Friday as global eco data supported the overall the overall things are okay story. Hawkish chatter from Collins and Brown, some of the first Fed heads since the blackout cleared. 10-year yield pulled back a bit, and all that allowed stocks to go up a bit for a while. But there was not enough good to offset the week. For the day, all 3 indices were down 1, 2, or 0.3%, pretty flat on the day. For the week, not so nice. The Dow was down nearly 2%, S&P down over 2 3/4%, and the Nasdaq was down over 2.5%. September strikes again. We will see. We're already talking about what October will bring. Normally we jump into the preview of the coming week, this week, but as you know, today is Tuesday, and yesterday the market was open. But as I mentioned last week, and again earlier, the first and second slowest trading day of the year, right ahead or right behind of Friday after Thanksgiving. Let's recap Monday, then we'll talk about this week first. This is important. For those of you who are waiting for more entertainment than just these videos, it looks like the Hollywood writers and producers have a tentative deal. No details yet, and nothing from the actors. Monday had stocks gapped lower at the bell and hit new multi-month lows. Negative news from China, and that offset the Hollywood news. Surprise, just Hollywood news. Stocks did not stay down too long, though there was not a strong move. Stocks did turn as S&P raised its growth outlook, and Fed head Goolsbee still talking about a soft landing. Stocks did get some buying at the close, and the market ended near the high for the day. The Dow was up a bit less than 0.25%, S&P and Nasdaq just under 0.5%. There was Amazon news about, yes, you guessed it, AI, and that took the stock up. Another announcement about new free COVID tests coming in from the government again. Let's close this video with a preview of what's left this week. Yes, watch for the shutdown noise, but as I mentioned, it will not be anything but short-term noise, nothing in my opinion on the long term. We'll get some housing data, and Thursday we'll get Powell with educators in a town hall type meeting. The Fed press release calls it, quote, conversation with the chair. He's going virtual and taking questions. I wouldn't count on anything new. You never know, though. So we will also see the PCE index. That's Friday. And please remember, this is reportedly watched closely by the Fed, so we'll see if it will move markets. We will get the Fed heads out again. Bowman, Kashkari, Cook, Goolsbee, Barkin, and Williams will also close out the week with the University of Michigan inflation survey and sentiment data, both being watched as well. A few quick records of note. S&P reached 100 days without a 1.5% drop for the first time since 2018. Also, the inverted yield curve being measured by the 2 versus 10 yield, 10-year treasuries, now 440 days and still going, the most since 1980s. Not to be forgotten, or should it be, upcoming Republican debate, this time at the Reagan Library. That's sure to be a source of many sound bites. No Trump on stage again. Both he and Biden will be making trips around Michigan. Biden's going to walk the lines with the UAW. So there you have it. Only 4 days left. Come back on Friday for a Friday planning video and back on Monday for the market update. Please keep in touch, and let's start to plan for Q4 and the end of the year wrap-up as we score our year versus the goals we have and set up 2024. Stay in touch and have a great week.